Hello, class. Please turn to your textbook on page 164, and I would like to discuss end of period spreadsheet and flow of accounting data. So, what we're going to see is how they worked up the end of period spreadsheet. First, we take our balance sheet, our owner's equity, and net income, financial statements, and we create columns called unadjusted trial balance, unadjusted trial balance, adjustments, and adjusted trial balance. So what happens is we'll take our balance sheet items and we would transfer each one of these items over to the unadjusted column on your spreadsheet, on your debits and your credits, and then we'll take the liability segment of it and move that over, the owner's equity segment, move that over, and the net income. And see, because here you will find your owner's equity section, and down here with the revenues expenses will be your income statement section. After we've done that, we add total it up to see if our totals are correct. $42,600 is the total that's on our unadjusted trial balance. Okay, and then we come over and we look at our adjustments. And those adjustments are the deferrals and accruals that we talked about in chapter 3. So the deferrals come in where we have this accounts receivable of $500, that's item A. And that item A, we have a debit. We come down here and locate item A as a credit because you have a double entry accounting. So for every debit, you should have a credit. For every credit, you should have a debit. So under this a debit to accounts receivable because someone has come in and purchased something and charged it, and it's recognized as revenue, and I mean as an accounts receivable, and it came down now and recognized as revenue. So we take all our adjusting entries and put them into under this adjustment section because that's our adjusting closing entries. Then we come over and we'll calculate our trial balance. And the trial balance shows us that for our cash side, we had $2,065, and there was no change to adjustment, so the ending balance is still a debit of $2,065. Now, for our retained our accounts receivable, we did have a balance of $2,220. We made an adjustment of $500, so now our new accounts receivable balance is $2,720. And the same thing happens with this the next line where we have supplies. We had $2,000 of supplies. We expensed $1,240 of it. So our supply account went down because we expensed a portion of it. And here it's down in the expense section for item B. We received $1,240 down here for supplies. Now, once we've done that, we go through the whole trial balance section here and get our new balances. And our new balances total $43,400. Our adjustment total for $2,360. You see, our debits and credits equal; they must equal. And then our unadjusted trial balance $42,600. So each one of these lines will balance. So now that we have our adjusted trial balance totals, we will go to page 165 and see how we have created new financials based on the adjusted trial balance. So the income statement is the first thing that we would do. The income statement shows that we have our income and our net income of $7,105. This net income flows down to the statement of owner's equity. Now, the statement of owner's equity gives us the amount of what our balance was before we close out. It shows our new net income. We subtract out any withdrawals that we've made. So our new balance now is $28,105. And this now we take the owner's equity section because it now includes the income statement and move it down and it goes into the liability section, the owner's equity section of our balance sheet. And so when we look at our balance sheet now that we have recalculated, it shows that we have assets, our total assets of $29,495. Our liability and equity, $29,495. So therefore, our liability and owner's equity equals our total asset. So that tells us that our accounts are in balance. So when we go through this, we're trying to find out what would our new net income be if we were to do a spreadsheet on adjusting data for our closing entry. And this is how we go about doing it. We do our adjusting entries, then we have to go back and recreate our income statement, our owner's equity, and our balance sheet. Thank you.